Since the announcement on Monday that Tesla are considering another stock split, this is what's happened to the stock price. Now, many people looking at this may be thinking, is it worthwhile still investing right now? Is it worth the risk? Is it overvalued and has no more potential? That's what we're going to discuss in this video. Let's find out together. To begin to answer this question, I think we need to go all the way back to 2019 and have a look at where the share price was in the December of that year. Now, for me, that period of time is kind of the first indication that we knew that the share price was going to move and it could do stuff. In hindsight, clearly. Because on December 2nd, the share price was at $67 a share. You fast forward to the February and the share price had increased to $180 a share. That's almost 3 times where it was prior, and really the first time that we started to see a big move in the share price. And this isn't by coincidence. We're talking about some things that have happened since then that have seen the share price move as sharply as we see it here in this graph, where it's almost a parabolic move to over $1,000. And also within this, we have to remember that we had a 5-to-1 stock split in August 2020. Now, naturally, it is a stock. It's on the stock market, so it is going to be volatile. And Tesla's no different. We're seeing a lot of peaks and troughs here, quite volatile movements in the share price when you look at this graph. But in order to understand whether there's going to be any future value in this company, we do need to have a look at their marketplace right now and what they've been able to achieve since 2019 when we first saw that share price spike quite significantly. 2021 was an amazing year for the company. Their profits leapt 6-fold, which meant that their profits were up to $5.5 billion for the year. That's the highest in their 19-year history. And that's largely down to the fact that there was huge sales in China and here in Europe. And I think it's worthwhile noting that obviously we've just come out the back end of a pandemic and there are still supply chain issues. And yes, they are impacted by this and they were impacted by the chip shortage, but nowhere near to the same level as traditional car makers. And that's down to the fact that Tesla really is a tech company and they were able to rewrite a lot of their software to bypass some of the chip shortages that they actually had. And this is an advantage for the business. We'll talk about some of their USPs a bit later on. But even if you just look beyond the profitability, because 5.5 billion in profits has to come from somewhere, you start to have a look at the number of cars that they're actually selling. The sales numbers are actually staggering, bearing in mind that 2021, again, supply chain issues and the pandemic were still a big factor for a lot of car manufacturers. In 2021, Tesla managed to deliver 936,172 cars. Now, compared to the same number in 2019, pre-pandemic, they only managed to deliver 367,500 cars. Now, I don't know whether there is a little bit of a coincidence here, but 2019, pre-pandemic, that's where we started to see the share price move quite significantly. This performance is not a coincidence. It is because they've been able to ramp up production, ramp up deliveries of vehicles. The goal was to get to 1 million. They missed that by a whisker, but it's still very, very impressive delivery numbers considering the fact that we were in a pandemic for pretty much all of 2020 and for a large part of 2021. And this brings us on to the subject of competition. It is only natural that when you have a company that has forged a new market space, who is leading that market space, that you will have new incumbents and existing businesses that work within the wider sector who simply just can't stand by and just watch a company take market share, which is essentially what's been happening with Tesla, although they created this space pretty much on their own. And through the years, we've seen competition from the likes of NIO, XPeng out in China. We've got Rivian, which is relatively new. Their IPO was relatively successful. You've got the companies like Nikola, for example. And I'm surprised that stock is still going given everything that's happened with that stock. But you can't then also ignore the big players, the traditional car makers, Ford, GM, you've got Porsche, BMW, Audi, all of these makers, car makers now who are moving into this EV space because they recognize the direction of travel, particularly with, energy prices, fuel prices being as high as they are. We know that there is reason, and people are coming to believe that there are viable reasons beyond just, saving the planet behind moving towards EVs. They are way more cost effective when it comes to money that you could actually save, and a lot less money to spend on things like maintenance as well. But when we start looking at the numbers specifically, let's have a look at the Model 3, for example. So in 2021, Tesla sold 112,687 Model 3s from January through to November. And if you look at, I guess, the closest competitor to them, that's the Volkswagen ID3. I've seen a lot of them around. They sold 62,467 units, which is just under half of that number. Now, a lot of people have been saying that the Ford Mark E is a really, really big competitor to cars like the Model 3 or the Model Y, for that matter, for Tesla. But even when you have a look at the numbers sold in 2021 for the Mark E, they only sold 27,000 cars. They still have a very, very long way to go, in my opinion, when it comes to catching up with Tesla, because of some of the logistical and strategic reasons that I'm going to talk about in a moment. One thing that's really important to bear in mind is that if you're looking to invest in Tesla and it is a stock that interests you, it's not just about what the company actually sells. Obviously, there's the strategic part of this equation in terms of they need materials. They need raw materials to be able to obviously build the cars, but more importantly, be able to actually build the battery cells that go into these vehicles. And that has been a challenge for Tesla for a very, very long time, particularly with the cost of resources actually increasing over this most recent few months or so. We know that even Elon himself says, and he admits, that they actually have an issue with raw materials for batteries, things like nickel. But it's not something that Tesla or Elon is going to allow anybody else to try and get the march on them on. They're going to do everything that they can, being the fact that they started this and they are front runners in this sector. And that brings us to the news that was announced yesterday. Tesla signing a secret nickel supply deal with Vale, a company out in Canada. And that is going to basically safeguard nickel supply for their batteries. Now, this brings us very nicely onto some of the, I guess, unique selling points or the moats of their stock. They have a strategic advantage. And if you've watched any of my previous Tesla videos, you're going to know what I'm going to say here. If you drive electric or you're thinking about driving electric, one of the big things that I guess puts people off is the practicalities of it all. If you're going to get into this car, you're going to have to drive, 50 miles a day or a 100-mile round trip. Are you going to have enough charge in the car to be able to make it to your place of work and home again, or wherever it is that you're going to go during the day? But it is a big concern for people. And I've spoken about the supercharger network before. This, for me, is one of their biggest strategic advantages over all of their competitors, because with battery technology improving, they're managing to get 300, almost 400 miles out of these batteries now. It will shorten the intervals between your charge, but more importantly, when you are going to be charging, the number of stations that they have available and how quick you can charge are two of the main factors. Tesla has the widest supercharging network on the planet. I believe it's the supercharger network being the reason that companies like Hertz and car rental companies are adding the Model 3 and the Model Y to their fleets, because people will be able to charge. It's about convenience, it's about practicality. That is the first moat or strategic advantage that I believe that Tesla has. The second for me is the fact that Tesla is almost 100% virtually integrated now, meaning they don't have to outsource the production of any components of their cars to any external companies if they don't want to. They have the robots, they build the robots that build the cars, essentially. And what that means is that from a profitability point of view, and this is one of the big challenges that someone like NIO faces out in China, is the fact that if you do not have your factory lines virtually integrated, where you are producing all of the components to your cars, all of the batteries, where you're going to have additional cost. And what that means is that that affects the bottom line. Because Tesla is now vertically integrated, they can afford to lower the car prices, increase the car prices in response to things like competition from competitors if they absolutely needed to. Now, I'm not saying that you should or should not invest in Tesla. Obviously, that is a personal choice for you. But personally, I love this company. I love the car. I've had one for a very, very long time. And the car actually got me to buy the stock because I love the car so much. I recently put more money into Tesla literally on Monday, and I've been able to profit a little bit from the increase in the share price since Monday over this last 5 days or so. I think if you want a company that is changing the world and is at the beginning of the adoption phase for something that is going to be brand new, who is leading the way in that field, then this could be a really, really good company for you. I think people are coming around to the thought that, there is a place for EV and it's practical, particularly when you start looking at the cost of fuel. I mean, I had a Model 3 as a courtesy car. For 320 miles, it cost me something like £25 to actually fit it up. You compare that to fuel costs right now, depending on what engine size you have and what car you have, you could be looking at anything between 80 to over £200 to fill up your tank. There's a big, big financial reason to actually move to EV. And I think as we move closer towards trying to rectify and ratify what's happening with energy prices and fuel prices, more people will wake up to that. And therefore, it presents a great opportunity. But as always, it is a stock that polarizes people and it is very, very volatile. You have to have the stomach for this. If you don't, stay away. This is very much the long play. If you are putting in money just like me, I'm guessing that we'll look at this maybe in a couple of years' time and look back at this video and look back at the stock price and hopefully be looking back with a smile on our face, reminiscing and thinking about how well we've done, because I genuinely believe that Tesla is going to do extremely well in the next 4, 5, 10 years. I mean, they're going to change the game, and I firmly believe that. If you have enjoyed this video and you want to hear a little bit more about some of the USPs, then maybe go watch this video right here. That will give you a little bit more information and insights around some of the other things that Tesla's got going on, particularly when we look at the supercharging network.